Today, we're tackling a big one, VA loan versus conventional loan. What's the difference, and which one should you choose? Welcome to VA Home Loan 101. This is episode 24 of 31. If you're returning, thank you for coming back and investing in yourself. If you're new, welcome. So please hit that subscribe button so that you can easily find the other videos and be notified when the next one drops. Now, today I'm going to be talking to you about conventional versus VA, and I'm going to walk you through the pros and the cons of each. And then we're going to go and answer some questions that I hear constantly. So if I have 20% down and don't need to pay PMI, wouldn't a conventional loan be better? Well, let's dive into that and explore it a little bit more. Let's start with discussing the basics, right? The VA loan is a benefit that you've earned through military service. It's backed by the federal government, right, through the Department of Veteran Affairs, and it allows qualified veterans and active duty members, reservists, guardsmen, and surviving spouses the opportunity to buy a home with no down payment, no PMI, and competitive interest rates. Now let's look at a conventional loan. A conventional loan is backed by Fannie Mae or Freddie Mac. There's no government guarantee, and it's open to everyone. So these typically require anywhere from as low as 3%, but mainly 5%, to about 20% down. And if you don't put at least 20% down, you'll pay private mortgage insurance until you have about 20% equity or so. So right now, off the bat, VA gives you access to better terms with less cash out of pocket. Now, the pros and the cons. VA loan pros, no money down required, no PMI, ever, lower interest rates on average, and more lenient credit to debts, incomes, and guidelines. Now, you do have limited closing costs as well because VA caps what you can be charged. Now, let's look at VA loan cons, right? VA funding fee, but it can be rolled into your loan or waived if you're disabled. You only can use it for your primary residence. Condos and townhomes must be approved. There's slightly stricter appraisal requirements. So there are some pros and some cons that you got to think about. Now let's talk about pros for conventional loans. It can be used for second homes. They can be used for investments or primary residences. There's no funding fee. They're a little bit more flexible, right? They have some more flexible appraisal and property condition requirements. They're easier to approve for certain condo projects. Conventional loan cons. There are a few of them, right? First is the down payment, 3 to 20%. Right, you got PMIs required if it's under 20%. You have higher interest rates for lower credit scores or smaller down payments. There's stricter debt to income ratio limits. Now, what if you had 20% down? You can just throw a chunk down, right? Why the VA still wins? So let's talk about the big question, right? Does the VA loan win against conventional if I have 20% down? Well, if you have 20% down and you don't need PMI, why wouldn't you just use a conventional loan? Well, here's the truth. Even with 20% down, VA is still often the better deal. Why? Well, reason number one, lower interest rates. VA loans typically offer anywhere from 1/4 to 0.5% lower rates than conventional loans on average. Now, on a $400,000 home, that could mean saving $100 to $200 a month, even with no PMI payment on either loan. Reason number two, the VA has easier approval underwriting in general, and it's usually more forgiving. Now, you can carry a higher debt to income limit ratio as well, and the credit score thresholds are very flexible, right? They're basically lender built versus VA built. Now, conventional loans get tougher the more you owe, right? Even with good credit. Now, reason number three, less cash out of pocket. Even if you can put 20% down, why would you want to tie up that much money in your home? The VA lets you put nothing down, and you can keep your cash for emergencies, investing, moving costs. Maybe you use that to buy an investment property and start building your board. Now that flexibility is worth a lot. Now, reason number 4, the waived VA funding fee for disabled veterans. So if you're 10% or more and your service connected to disabled, you don't pay the funding fee at all. That's free access to all the VA loan benefits with no extra cost, and that is huge. Even if you're not disabled, that funding fee, around 2.15% for first-time users, can be rolled into the loan, and the monthly savings from lower interest rates still outweigh the upfront cost in most cases. Now let's break this down for a real-world scenario, shall we? Let's say that you're buying a $400,000 home. A conventional loan with 20% down. We're going to go and look at no PMI. We're going to assume the interest rate's 7% just to keep things round. Okay, that's a $320,000 loan. Your monthly payments, principal and interest, $2,130. VA loan, no money down, 6.5% interest rate, $400,000 loan. Monthly payment, $2,020, just principal and interest. No PMI. The funding fee is applicable if financed, right? So you're looking at about $8,600 over 30 years. Now, despite putting nothing down, your monthly payment is still lower with the VA loan because of that interest rate. That's the power of the benefit that you have earned. That's why I'm doing this series, so that you can see the financial benefits of the VA loan. So here's the bottom line. If you're eligible for a VA loan, use it. Even if you've got 20% in the bank, the better rate, the no PMI, the lower monthly cost, the flexible guidelines, all often make the VA loan the smarter option. And remember, this isn't just about buying a house. It's about buying smart, protecting your cash, and using every benefit that your service has earned you. Now, if you want help comparing your options between conventional and VA loan side by side, reach out. I'd be more than happy to help you make the right move, okay? And if this does help, please hit that like button. And if you do me a favor and hit that subscribe button, drop your questions in the comments. I'll answer them. I'll see you in the next one. And as always, thank you for your service.